take a look at Chapter 7, which is an overview of the auditing process, audit evidence, audit staffing, and documenting an audit, heavy loaded chapter. So the first learning objectives that the book outlines is the steps in the actual audit process from pre-engagement, so before you've even accepted a client, to reporting, so the very end of the audit. So I liked the figure that the book had, figure 7.1, and it starts with pre-engagement procedures. So this is really ensuring that the client is a client that you want to take on as a client in your portfolio. Acceptance of the auditor's appointment. You must have an engagement letter. That's your contract between the auditor and the client. Then 4, this is where we're kind of at with your current audit simulations. You have to gain an understanding of the client and what accounts they're using, and this leads to actually planning the audit. From there, we gain an understanding of the accounting systems and look at the internal controls overall. And number 6, the test of internal controls is really only for the public companies where you'll do a full SOX 404 audit. There are times when you would do test of controls in order to reduce your actual audit evidence or using it as audit evidence, but those would be in rare situations. So usually you would only do a test of internal controls, the true test, in a Sarbanes-Oxley 404 audit. Number 7, actually looking at the transactions and account balances through the substantive testing. So this is when we actually get right into the meat of the audit, and we're looking at audit documentations, which we'll be talking about in this chapter. And then in number 8, complete and review all of your work papers. Number 9, report to your shareholders the actual audit in your opinion. And then you continue on as the auditor. So the procedures used to actually gather audit evidence. There are many ways to actually gather the evidence during your audit. You can inspect, number 1, so actually going out to a warehouse and inspecting that they really did buy that piece of equipment or that it's actually sitting on their warehouse. Inspecting actual documentation. Actually, number 2 is really observing that the piece of equipment is actually on their floor, where the inspection part would be more looking at the document that says, yes, there was a purchase and sale agreement for this big piece of equipment. External confirmation, number 3, is usually the most valid type of audit evidence. So you'd confirm with a bank that this client really has $1 million in cash, and the bank would say, yes, they do, or X amount of loans outstanding, the bank comes back and says, yes, they do. So external confirmation of third-party evidence is always one of the most useful ways of gathering audit evidence, or the most reliable ways. You would do a recalculation of work. Perhaps you get a big inventory listing. You have to go through and actually recalculate the extensions to make sure that there's not an error within the report that you're obtaining, reperforming the work, maybe going through and literally kind of reperforming a reconciliation or something of the sort. And number 6, the analytical procedures are what you're doing in your case study. So looking at the accounts analytically and trying to determine if they make sense. And number 7, simply inquiry of talking to the client and getting their take on the accounts. I will say to actually have it count towards audit evidence, analytical procedures and inquiry alone are not enough audit evidence. And usually in each area, you'd see a culmination of each of these different procedures. So the book goes into a lot of detail, but just to highlight some of the main points with this audit evidence. Number 3, discuss the different sources of audit evidence. Again, it's important to note that whatever evidence the auditor decides to collect does depend on a number of factors. The relevance, is this useful? Is it something that I can use to use? Is it reliable? Is it something that seems like a valid source of documentation? Is it available? Let's be realistic about what we're trying to ask for. Can I actually obtain that information? Is it timely? We can't wait 6 months for, the client to hire somebody to create a system to run specific reports for us. And then, of course, the cost is really one of the major factors with obtaining audit evidence. We could go through the whole list that we just read and obtain every piece of that. But what's the cost to us? And, we're always looking at the cost of the audit and trying to make sure that we stay in the budget. Looking at this information kind of in a nice figure that I thought the book had, looking at our different types of evidence, we have observation and reperformance, and then looking at, how reliable it is. If you observe or reperform something, it's pretty reliable because you're the one doing it. It's usually readily available on a timely basis. But the high cost, you're spending your time, the auditor's charge rates are really high. Even a staff person, can be around $150 to $200 an hour. And it just obviously goes up from there. So the auditor's time is very costly. If we look at external information, getting confirmations from a third party or documentation like invoices directly from a third party, the level of reliability, we're saying high to medium. I'd actually put this up into the high category, especially when you're getting information directly from the third party. And the idea here is, why would a third party, really deceive you unless there's some type of collusion happening? But generally, third-party information is a high level of reliability. It might be less readily available. The third party needs to, give you the information. And again, it might not be as timely, but the cost is, high to medium, depending on the information that is provided. Sometimes banks do charge for confirmations. The legal companies who would do legal letters with are charging the client money to give you a legal letter, you the auditor. And then we look at internal to the client, so actually obtaining the accounting records, inquiring with the client. We would say this is probably the lowest level of reliability when you're considering all of the other types of evidence, but it's usually readily available and timely, and this would be a lower cost because it's a matter of the client giving you the information. So the number 4 objective for this chapter, explain the factors auditors should seek when deciding which evidence to actually seek. And again, the main point with audit evidence is to obtain sufficient appropriate evidence to be reasonably assured that the auditors or that the audited financial statements do not contain unidentified material misstatements. But this next point, that the amount of appropriate evidence really varies with circumstances. And this is a really hard area for new accountants and auditors to kind of get their head around, because the collection of evidence is really, really judgmental. You might not know as a new auditor what is an appropriate amount of evidence. And that's why having a manager on the engagement to help, so that you're not over auditing, but certainly not under auditing, does not take place. And again, it varies from engagement to engagement. So just because you got this type of information for this client doesn't necessarily mean that it's sufficient evidence for your next client. And again, depending on the amount is what you assess the risk levels at, your assessment of the internal control effectiveness, the significance of the account, how big is the financial statement account that you're actually auditing. Has there been fraud or findings of fraud or noncompliance in the past? And do you feel that you can actually rely on the evidence? And, depending on these really depends on the level that you'll obtain. This is something I wanted to point out to. Your book goes into more detail, but the factors to obtain audit evidence also affect the nature, extent, and timing. I like the acronym NET thinking of these. So the nature of the evidence, the extent or how much of the evidence, and the timing that it will take to obtain the evidence. This I remember being a strong CPA question on the exam. So make sure to do a thorough reading of this in your book, but just highlighting that nature, extent, timing with the acronym NET, we're also concerned about with collecting evidence. And then this slide from your book really does a nice depiction of, okay, yes, you can see the top here. You could collect this amount of evidence. You could collect it all. But this amount of evidence is sufficient to form an opinion. So you can't collect this much when it's going to cost you so much more, when this much might be sufficient. And then, if we're all the way down here, clearly there's not enough evidence to support an opinion, which is our main objective within the engagement. If you look at learning objective number 5, discuss the requirements with respect to auditors' capabilities and competence. Obviously, the auditor needs to be capable and competent. The firm must have knowledge of the client's industry. So when you're taking on a new company, the firm can't just take on any old company that they want, especially with the different industries that are in place. If you're a company that does not audit banks at all, you really don't have a lot of business taking on a company or a client that is in the banking industry. Or if your company has never audited nonprofits before, taking on a nonprofit would really require a lot of knowledge to get up to speed with that industry. It's not impossible, and it's not illegal to do. It's just a lot of work sometimes to obtain the proper knowledge. So a lot of times you'll see firms specialize in specific industries because they become kind of, very knowledgeable about that particular industry. Number 2, the firm has sufficient personnel, right? You need the amount of people to get the job done. You could hire an expert if you feel that would help get through the audit. Again, qualified individuals to perform quality reviews. And the firm must meet the deadline. So if you take on a client and they have a deadline of, let's say, March 15th to have all of their reportings ready for the bank, or, let's say 60 days for the public companies, let's say the end of February, beginning of March, you have to meet those deadlines. And if you don't think that you have the capable or the right amount of personnel to do that, again, you have no business taking on these clients. Number 6, explain the importance of carefully assigning, directing, supervising, and reviewing the work papers of the engagement team. This is one of those areas where, the reviews and supervision need to be in place every time an engagement is being performed. And then looking at the responsibilities of audit engagement partners when part of the audit work is performed by experts or other auditors. There may be instances where your firm can't perform all of the audit. Maybe you do hire another firm to do a certain area, maybe evaluation of some sort. We would use external auditors to help with inventory counts that were around the country. So being a Massachusetts-based firm, if we had the need to do inventory counts in Virginia or, way out in New York or Washington, we had some, that was a retail client with store locations. We hired an affiliate firm that performed the inventory observation for us, and then we were able to rely on their work. But again, as the auditor relying on someone else, you need to make sure that that other firm possesses the capabilities and competence for the task, are independent, and that the work is being done according to the standards. Now, the importance of audit documentation, we've said this already, is to provide evidence that the work performed during the audit and the results obtained and conclusion reached are all in conclusion with GAAS, so our generally accepted auditing standards. Also, that the evidence resulting from audit work is sufficient and appropriate to obtain and express that opinion. That's the main thing, that you're obtaining all of this audit documentation to be able to express an opinion that these financial statements are reasonably free from material misstatement. And here are some different sources of documentation. This is right from your book, but we have a permanent file. You might call it a perm file, where all of just the documentation that carries from audit to audit is obtained. And then the current audit file. So the working papers, we're obtaining all of your actual evidence to support the audit. Now, again, the importance of reviewing audit documentation, just to point out the layers that are generally included on an audit. You would have your staff accountant, who usually has 1 to 3 years of experience. They're the ones who are usually doing most of the preparation of the work. And then the reviewer comes in, who's usually a senior, who does the first layer of the review. So the staff person would actually prepare the work papers, and the reviewer would come in and review the work papers, give any comments back to the staff person to make corrections. The audit manager has the next level of review, looking at even all of the work that the senior has reviewed. Generally, in most firms, the audit manager is a CPA, and the rule is that on any audit, every single work paper needs to be signed off by a CPA. So the audit manager usually goes through every work paper and reviews it and signs off. And then the audit partner comes in, and generally an audit partner's job is to look at the very high risk areas. So if the investment accounting is a high risk area for the client, or inventory or equity, this is where the audit partner would spend most of their attention. They don't necessarily need to sign off on every single work paper. Again, it's the high risk work papers that they're focused on. And then as the last level of review, you'd have a quality control review, that they're making sure that the proper work papers are included in the file in accordance to the standards, and so on. And then our final objective for this chapter is to discuss the auditor's responsibilities with respect to assembling and retaining work papers. And I know our poor Enron, not poor Enron, our bad Enron, creeps into a lot of the discussions. But that was the demise of Arthur Andersen, Enron's public accounting firm, that they went through and actually shredded work papers. Why would they do that if they weren't guilty, is the question of the decade. And the conclusion was that they did have something to hide. That's why they shredded the work papers. So the rule of thumb on an engagement is that once the audit is complete, you can't delete or discard any audit documentation of any nature before the end of the retention period, which is generally 5 years. Something to keep in mind, any documentation that you have could be used in the court of law. So if you have old files sitting on your computer or in your email, my strong suggestion is to either include them in the audit file, the true audit work papers, or dispose of them. Because you don't want to find yourself in a situation where all of a sudden you're cleaning out your mailbox or your documentation box in your files, and you're discarding assets, and then later on the client gets subpoenaed and it looks like you've destroyed work papers in a sense. So really the work paper policy should be every work paper that pertains to your client, whether it be emails, just random work papers that are helping you form your audit documentation, should be deleted from your computer if they're not included in your actual work file. So good rule to follow. So that's all for chapter 7. Got through it pretty quickly, but let me know if you have any questions. Thank you.